Having an exit indicator is extremely important. You're going to use one on almost every trade you make. So if you have a really good one and you took the time to find a really good one, the amount of money that it saves you and the amount of pips it prevents you from losing just keeps stacking up and stacking up and stacking up over time. Now, if you don't take the time to find a good one, it's still going to help you out. It's still going to stack money over time, just on a very different scale. Now, the greatest thing about this is you, at the end of the day, get to choose which one of those pictures more applies to you. It's such a big part of what we do, yet I've never really dedicated a lot of time to just talking about a major piece of our algorithm, which is exit indicators. It got its own podcast, but it wasn't even its own podcast. It kind of split time with something else. So the time has come that we give it its own video, because we've also been talking about how since the market is so dead and there's so few really great opportunities to actually trade, that it's the perfect time to go back and test. And just how important that back testing is when it comes to attention to detail and doing it the right way. So I want to give you all of the information I can in this very critical part of the puzzle. So in this video, we're going to talk about the main functions of an exit indicator. In case anybody's confused, it doesn't just get you out of winning trades. It does a few other things too. It's very, very important in the grand scheme of things. The general rules to follow for something like this, I might have touched on it, but we're going to really put them out there so you can put them in your notes, so you'll always have a video to come back to, so you'll never be confused on what you need to look for when it comes to an exit indicator. And then I'm actually just going to give you one. I've given you one before. Do you remember what it was? We'll talk about it. Now, the one I'm going to give you is not super great, but it is pretty functional. It's way better than not having one at all. And I'm going to show you how to use it. But either way, this video is a long time coming. This is what we know about our algorithm so far. We have one piece left to reveal, but I've said it before, traders. I have given you more than enough to be super, super dangerous when it comes to the market. This right here is just another thing that is going to help eliminate losses that this thing gives us. Just like this does, and just like this does. So we're just going to make it a little stronger by adding that final piece. But as far as right now goes, you have just about everything you will ever need. But this exit indicator is a big piece of that. It is, at the end of the day, the one piece of this entire equation that actually puts the money right back into your pocket. You know, not directly, but indirectly, and certainly does. So let's discuss how. Now, there are multiple scenarios where an exit indicator comes into play. The most obvious one that everybody thinks about is when you're in a winning trade. Let's say you've already taken half of your money off the table at a certain point. Now what do? Well, you are going to want something that's going to get you out at the best possible spot. Nobody exits a long trade at the very top. Nobody exits a short trade at the very bottom. That's not realistic. But you want to get it fairly close. And so you notice right here, before it hits your trailing stop, we have not done this video yet. There is a reason for that. But you're still going to want to have a trailing stop somewhere after a certain point. You guys can kind of figure out a general place to put it for right now. We'll go a little deeper on that once the trailing stop video comes up, but a lot of it's just common sense. But trailing stops are really put into play in case something really bad happens. Like, let's say you're in a long trade, you're going to put a trailing stop there just to prevent that really crazy short fuck you candle that we've all seen happen before. It's just to protect your wins from something like that. You really ultimately want to be able to get out of a trade when your exit indicator tells you to do so. And if it can do that far more often than your winning trade actually coming back and hitting your trailing stop loss, then you have something good. You know, it's just a matter of how much better can you make it. The more you can improve on it, the more money that ends up going into your pocket. And like I said, this is going to happen over and over again because you're going to use this thing on almost every trade you make, because it's not just for big winning trades. It's also for losing trades. You want your exit indicator to get you out of a losing trade far more often than that trade actually hitting your stop loss. For those of you who trade the no-nonsense Forex way, you know that we put our stop loss at 1.5 times the ATR. And we take half of our profit off the table once price actually hits the ATR of the pair once we entered. So on the surface, it's a 1 to 1.5 ratio, which is insane. Nobody would ever sign up for something like that, but they're missing the nuances, and a really big nuance is the fact that price should almost never hit your stop loss. It's bound to happen, but far, far more often than not, your exit indicator should be able to bail you out well before price ever gets there. Stop loss almost kind of acts the same way as a trailing stop does. You're really just protecting yourself from cataclysmic candles going the other way. Your exit indicator should be the thing that gets you out of most trades almost all the time. Got it? And then the other one that comes up sometimes, but if you enter a trade and then all of a sudden it just doesn't go anywhere at all, your exit indicator should eventually catch up to itself and tell you, okay, it's time. We're not going to wait anymore. The momentum we thought was there wasn't really there, and it's time to just go ahead and exit for a small gain or a small loss. I mean, your exit indicator does so much of the heavy lifting, and I don't think a lot of you spend enough time finding a really, really great one, but it's what you should be spending a lot of your time on. That being said, let's just go over some general rules that you need to follow and some things you have to know when it comes to finding one of these things. First off, and we've mentioned this before, it can actually be the same as your confirmation indicator. Your confirmation indicator would have to be so awesome that it even gives you the best exits out of all of the other options out there. But this is possible. As of right now, my main confirmation indicator also exits me out of a trade. Wasn't always that way, and might not always be that way in the future, but as of right now, as I'm talking to you, this applies to me, and it can apply to you too. But don't force it just for the sake of simplicity. Like we just talked about, this thing is super, super important, and you want the best one you can possibly have. So if it's not the same as your confirmation indicator, it only really goes on your chart after you've entered a trade. Keep your charts fairly clean, avoid confusion. You can just not even have it on your chart until you actually enter. And then once you're in a trade, put it on, let it do what it does, and then once you're done with it, take it off. Super simple. But for those of you who are brand new to this channel or just learning what this thing does, it's very easy. You just exit when it signals you to do so, and we're going to go to my charts later on and take a look at how this actually happens. So let's go over some examples of these. First, I think, in my opinion, a 2 lines cross indicator is a great way to go. We talked about these in the trend indicators video. It's pretty much just when one line crosses another. Now, they're not always going to be great for entries, but they could be good for exit. And when you find a 2 lines cross indicator and you go test it, you need to be testing for both, because it could be really great for one and not so great for the other, or vice versa, or neither, or both. You don't know, but you need to do more than just test it for entries, because it very well could have been that really great exit indicator that has been eluding you this whole time. Now, for those of you who have followed this channel for a while, don't get mad at me when I put this up, but a possibility for what could be a really great exit indicator is your best reversal indicator. Now, we do not trade reversals here at No Nonsense Forex. It is a sucker's game. I've made videos on this. But the best reversal indicator in the world, in my opinion, is still not going to be great at finding you trade entries. But it just might provide a really good signal to actually exit a trade. Now, I know in some of your heads right now you're thinking, well, isn't it just going to have price go the other way? Not necessarily. Traders, with an exit indicator, you just want to exit at a point to where the momentum is pretty much gone, and the market is now in that consolidation, that decision point as to what it is going to do next. You don't know what that next is going to be, so it's best just to get out, let the consolidation happen, let those crazy little jerky up and down candles that often happen during the consolidation phase happen to where it doesn't affect you, and then hopefully, once price has decided to go long or short again, you can re-enter. I mean, that's really the best situation right there. But I think a lot of people think that just because some kind of exit indicator they have is telling them the price is done going one way or another, that it means it's automatically going to start going the other way. Not the case. At this point, once we're in a trade and we want to find the best place to exit, we're not really concerned about what price is going to do, 6 or 7 candles into the future. We just want to know when the current momentum that we are riding is most likely done. That is all we want to know. And if a top-level reversal indicator can tell us that, well, then it's worth having. Not for entering trades, like most people do, for actually exiting a trade we're already in. You've noticed this is a bit of a running theme on this channel. We often take things that are fairly common, that a lot of people use one way, and we use them a completely different way. And this is one of those scenarios here. Another thing you can use, speaking of what we just got done talking about, is Heikinashi. That is one of the most popular videos I did, mainly because Heikinashi is such a highly searched for term on YouTube. I had no idea. But perfect example, like I said, of what we just talked about. In that video, I showed you, hey, look, most people use this for entries. Your best bet, its best redeeming quality, in my opinion, is to actually use it as an exit indicator. Use it right after you've entered a trade and let those candles go one way, and as soon as that candle changes colors, it's time to get out. At the end of the day, is it your best option? I don't think so. I don't think so at all. But it's a decent option. It's way better to have than to not have. And then the one I'm about to give you kind of falls under that same category. It is a useful addition to your toolbox. I don't think it's great, but it's way better than not having one. As of right now, it's going to save you a lot of pips over time, and we're going to use it in a way to where most people don't use it. So there's a lot of parallels here. And then in next week's video, I'm already committing to the topic for next week's video. I'm going to show you another way you can actually do this. So these videos are going to kind of tie together a bit. But the main thing, the important thing, and I think the really cool thing, is there are a lot of different ways you can approach this. And the more different ways there are to approach this, the more work you're going to have to put in, but also the more possibilities you are going to have to find a really, really great one. And that to me is the exciting part. We're in a super dead market right now. You guys have the time to go test these things. If you're not utilizing that time, you're passing up on a great, great opportunity, because I am giving you a lot more details on what to look for, so you can totally optimize this search now, and it's a perfect time to go do that. It's such an important time in your trading progress, this whole back testing and finding all these brand new indicators and testing them to the most optimal of your ability, to where we've already learned, especially in last week's video. Once you put this thing together, if you can just wind it up and let it go and stay out of its way, it will do nothing but make you money over and over again for the rest of your trading life. A little bit of time now for a lifetime of gains, perpetual gains. It's totally worth it. But let's go to that example that I'm going to give you right now. Now, a lot of you are probably already familiar with this. It's called the Relative Vigor Index. It is already on your MT4, so many of you have seen it. A lot of you have probably played around with it. Now, the thing about it is it's not good for entries at all, in my opinion, but it's pretty decent for exits. Problem is, nobody ever really looks at it that way. Now, this can also kind of serve as your gatekeeper like Heikinashi did. So what I mean by that is, we know it works okay. So every exit indicator that you test from this point on, you can measure against the Relative Vigor Index if you want to. You can measure it against Heikinashi if you want to. Whatever you decide to be your gatekeeper, that is the indicator that it has to beat. If it cannot beat what amounts to be a fairly average exit indicator, well, then it just doesn't belong in your toolbox at all. There is really no further testing needed, and you can just simply move on to the next one. But I think having a gatekeeper is extremely useful. So let's see how this one measures up, shall we? We are on the Euro-Dollar daily chart, and I had to go back a little bit. You guys know how slow this market is. As far as me teaching you things and showing you things on the screens. I need to go to a point in time where the market was actually moving. It's been brutal lately. But as we all know, with chaos theory, it's only a matter of time before it stops being so dead. So like I said, now's a perfect time. Let's take a look at the relative vigor index, if I can actually say it. All right. And here we go. So the default setting is 10. I think this color here is normally green. I know a lot of you guys look at this video on your phone, so I'm going to make things a little brighter so it's easier to see. So I turned that into a yellow. But as far as the periods go, I'm going to save you a little bit of time here. I personally think this default setting is absolutely as high as you should go. I like speeding it up a little bit. So we're going to turn this into an 8 and see what that does. Like anything, you got to strike a balance. You got to find out which one allows the trade to run its course and then not get you out too early, but also not get you out too late. You really got to play around with this. And there's only one setting you can use here. So I'm going to go with 8 and put her up. Now, for teaching purposes, let's just focus right now on how long it would have kept you in to a winning trade. So let's start out here. Let's say you would have gone long, somewhere maybe right there, realistically, and you want to let this thing run, and it's already hit your first take profit, and now you just want to see, okay, at what point do I get out of this trade? Let's see how well it would have done. So what you're going to wait for it to do is to cross back over the yellow, to cross back over the red, and once it has done that and the candle has closed, remember that part, then you actually exit. Now, what candle did actually do that on? So it was this one right here, which, again, you're not going to exit at the top more often than not. And this candle was pretty big. So it might have hit your trailing stop. It might not have, but it wasn't quite that one. It was this one. So this is where you would have exited. And not a huge win, but a good win, and you protected yourself from price going any further down. Not the greatest, but let's see what else it did. If you would have gone short for any reason here, there was not a whole lot of room for you to make any money. So let's see if this thing got you out at a decent point. Let's say if you would have gotten short right here, you would have exited right here. Small loss. That's pretty good because price immediately started going higher after that candle occurred. You would have wanted to be out right there, and your exit indicator told you to, and you would have been safe from any further losses. So if you would have gone long, let price retraced and done its thing, and then gone long again, let's see what that would have done. Where would you have gotten out? The yellow crosses back down over the red right here, which would have been this candle right here. That's pretty damn good. So if you would have gone long anywhere in here, you would have exited right here, as you can see, before the next big drop occurred. Perfect. That is good pip preservation right there. And then if for some reason you would have gone short here at any point in time, let's see where it would have gotten you out. You want the yellow to cross back up over the red, which is right there, as you can see down below. And that would have been on that candle. Ooh, maybe. Yeah, dude. Look down below. I think you would have gotten it right at that candle. That is damn near optimal. If I'm wrong, then it would have been this candle, the very next candle, the one right here. Pretty good. And then if we want to keep going, let's see, where were we just there? So if you would have gone long, I don't know why you would have really gone long here, but if you did, you'd have gotten out down here. That's not good. Your trailing stop would have probably gotten hit if you were doing anything like that. So not great, but then if you were to go short, let's see, did it get you out before that huge candle that went long? Yes, it did. You'd have gotten out either right there or right there. Really? Damn. You would have actually gotten out the bottom or very near it before that huge FU candle shot the other way. Like I said, sometimes it doesn't do you great. Sometimes it does you amazing. You just got to play with this thing and tweak it to where it gives you pretty damn good results almost all the time. Because in a number of the examples that I just showed you here, it prevented us from staying in a trade too long. It often got us out, and if you keep testing this, you're going to see this. It'll often get you out before those candles going the other way even really start to materialize. That's a pretty big deal. And this exit indicator isn't even top notch. So when you find ones down the road that can improve on this, the more and more pips are going to end up back into your account to where they have normally gone back to the big banks or your broker, if your broker's a dealing desk. So once you start using this, you're going to use it all the time. And every time you use it and every time it works, that is that many pips that are going right back into your pocket every single time you trade and it actually comes into play. That's a lot of trades, especially if you extrapolate that amount over time. That is a lot of pips into your pocket. And finding a good one of these is worth however long it takes you to actually find one, test it, tweak it, and optimize it. But make sure you do it in different types of markets too, because this thing is also going to get you out of losses. So you got to find areas to where you're going to take a lot of losses and see how well this thing would have mitigated those as well. I don't think there's a real need to do that now. This video does not need to go a half hour long, but you guys get the idea. You know how to test these. You know what to look for now. Go out there and start looking. And if you start looking based on those rules I set, the chances of you finding a really great one is going to go way up. Because most people don't use exit indicators, so they don't even know what they're looking for, much less how. Now you know the what and the how. So get cracking. So in conclusion, take this step very seriously. Pips go right back into your pocket every time if you do this right. The more time you spend searching and testing and optimizing, the more pips this is going to be, multiplied by the amount of times this exit indicator comes into play, which is going to be almost every trade you make. So if you're a numbers guy, this can get very, very exciting. But always have a gatekeeper no matter what you do, whether it's the relative vigor index, whether it's Heikin-Ashi, whether it's something else you have found. This search will go a lot quicker if you can just record the results one of those two things give you and just simply see right at the start if the new exit indicator you have discovered on the default settings can beat it. If it can't, then tweaking it is probably not going to make it that much better, and you can just simply move on to the next one. These searches are never easy, but I want to make your search as easy as possible. And then while it's slow, test. This is the time to do it. This super slow, dead market is actually a gift. Take something that is a disadvantage to most trend traders and flip it and turn it into your advantage. To go dedicate most of your time to testing and learning and building this house with the best materials you can find, because you're going to live in this house for a while and you are currently in the building phase. Take advantage of what is given to you. Now, if you like our approach and it makes sense and you haven't done it yet, subscribe, hit the bell. What are you waiting for? It takes a little while to get used to the way we do things here, but once you've figured it out, and it really doesn't take long, every piece of this puzzle that you start adding goes to building a system that takes all of the guesswork out of things and does nothing but make money for you over and over and over again. Something like that will never be handed to you, but through this video, the instructions on how to build something like that finally is. Those who take advantage of that are going to reap the rewards. Many already have, so go get it.